Hey Arch, this is Ryan with TrendLizard.com. Happy long weekend. I hope you're having a good, relaxing Saturday morning. I'm going to take a look at the three tickers that you sent me from the email that you sent me earlier this week. You requested analysis on MicroStrategy, MSTR, Microsoft, MSFT, and then ARK. What was it? FinTech, I think, or ARK Innovation, I think, ETF, which is ARKK. So we're going to go through all three of those. I know I've taken a look at Microsoft for you before. I'm not sure about the other two. Either way, we're going to start at the beginning, start with MSTR, MicroStrategy. Here it is. It was incepted back in 1998. Had a good start, shot very high right off the get, and then absolutely got wrecked in that dot-com bubble burst. Gave us a very clean five-wave decline at that time. Went from about 2,400 when you remove all the splits down to 6. So had a bad time in those years. Since then, it's been on the recovery path, and that has really accelerated in 2020. But as is, basically what you have is a 5-wave decline and a recovery that so far is 3 waves up. So on the longest time frame, you can't really say that the long-term time frame or trend is up. Nevertheless, it looks bullish in the fact that even a Fibonacci retracement of this big down leg back in 2000, 2001, 2002 would point it up to 1300 to 2100. It doesn't look right because this is a log scale, but if we look at it in a linear scale where every box is the same size, you can see what really happened. You had the big up move, massive down move, lots of chopping around, and just lately just getting going to the upside here. So even if this is just a counter trend recovery, there is the potential for it to continue higher. We're going to analyze it as if this is a more trendy movement because we can, and I'll show you as we progress. But let's take a look at the recovery effort here. So this is what's happened off the 2002 low. A very big recovery off that 2002 low from that 5 area up to like 125, 150 before it gave us a large pullback in 2008, 2009 during the financial crisis. And then it had a big run up in 2008, 9, 10, 11. And then sideways for many years before it really took off to the upside in 2020. So overall, I mean, it has bullish potential in that up legs look like trendy 5-wave moves. The pullbacks are clear counter-trend 3-wave moves. And for the most part, it's adhered to finding support in the yellow Fibonacci area. This one went below it a little bit, but it ultimately found support there and turned higher to the upside. So the potential is that it's in a 3rd-wave advance now. Or maybe a C-wave advance if you want to label it that way. Either way, the potential is there for higher prices. Let's keep zooming in. We're going to take a look at this action in 2020. Here's what's happened. It had a nice trendy 5-wave advance early on, flattened out for a while, but then has taken off to the upside again and appears to still be in that 3rd-wave advance that began back in July. So it continues to look higher to the upside. You can see that again, upside action is proving trendy. 5-wave moves, counter-trend pullbacks are happening to the downside. It does look like we could be nearing the end of an up leg that began in early October, which is an internal 3rd-wave advance. You can see a pretty clear 5-wave move right here that looks like it's nearing an end. So we need to be careful. It's possible that you're going to get a larger pullback, something like maybe you saw it back in September, maybe a little bit longer in time because this one was pretty short. Overall, it looks bullish, but that's something to be on guard for. So let's zoom in one more time and take a look at just this most recent up leg to see what's going on here. Again, it looks like it could be nearing an end to the upside and getting ready to give us a larger counter trend pullback if we step back out. That's just this up leg right here. So if this up leg completes, that's going to complete that entire up leg off of October's low, so you would get a larger pullback. On a larger time frame, as long as it stays above 410, it's going to be bullish. But if we go in and look at a shorter time frame, a move below 540 would indicate that you're getting that larger counter trend pullback. Should just be a temporary pullback, but it should continue higher overall. So that's the expectation. I think you're going to get a 5-wave advance off of March's low. We still don't have anything close to the pullback that we saw here, so we should get one of those moves and a final up leg before this advance completes. So we're bullish. You might see a near-term high. A move below 540 says that we are at a near-term high, but as long as it stays above 410, you can stay bullish on a longer time frame with the idea that even if this is a large counter trend recovery off the 2002 low, it can certainly head higher before it even tests a Fibonacci retracement of the damage it sustained back in 2000, 2001, and 2002. So That is MicroStrategy. Let's go ahead and move on and take a look at Microsoft. We have definitely taken a look at this one several times before. Let's do it again. It was incepted back in 1986. Huge, beautiful 5-wave trendy advance to the upside. Massive 3-wave pullback that ended in 2009, and since then has been in a new trendy, not exactly new at this point, but a trendy 5-wave advance since 2009. So let's zoom in just on the advance off the 2009 low. This is it. First wave, second wave. It's been in a huge 3rd wave advance, very extended 3rd wave advance. Since then, it counts out very nicely. The fear is that we're getting closer to a high to this 3rd wave advance and might get a larger pullback for a 4th wave, something like we saw back here for this 2nd wave. So we're on guard for that. Let's go ahead and zoom in and take a look at more proximate action, specifically the action off a 2020's low, to determine if we're at that high or when that high might occur. So this takes a look at that. Unlike the whole market, Microsoft has actually flattened out since early September. It gave us a nice 5-wave advance to the upside. Since then, it's been in a pullback. Now, the good news is that this pullback is clearly a counter trend move. There's no doubt about it. It stayed near the high for such a long amount of time. It's pretty clear that it's a counter trend move. And also those initial down legs, every down leg is a 3-wave move. So in both respects, it looks like a counter trend move. The bad news is it doesn't look like it's complete yet. It looks like it could head lower. It should head lower back into this yellow support area. If it continues below 170, I don't think it's going to, but if it does, it would tell us that we finished this 3rd wave. We finished this 3rd wave, and we're getting that larger 4th wave advance. It's just a slow start to it. It's a large counter trend move that has a slow that started slowly. If it stays above there, then we'll have the potential that we're getting an extended, 5th wave advance, the blue 5th wave advance within that 3rd wave, and there will be significant benefits to that. It would have a lot of upside potential from there. So it's kind of what we're looking at. We're looking for a larger counter trend pullback. I guess you can't rule out a triangle. I don't see why a triangle would happen here. If this is a larger extended 5th wave advance, this would be a 2nd wave, and therefore should not give us a triangle. So it doesn't make a lot of sense for this to ultimately just end in a contracting form and head directly higher. The expectation is for a larger pullback. So I would wait for it. If it moves below 170 again, it's bullish. It's bearish on the larger time frame. In that it means we're in a very large 4th wave correction that should last several more months. So that's the key level. So the expectation, expect a larger counter trend pullback. If it can move into this yellow area and turn higher, that's going to look like a good opportunity. Otherwise, if it continues lower, you're in that larger 4th wave correction. Either way, it's going to head higher overall because this is counter trend movement, but it's just not one that looks like it's poised to head higher right away. So be careful there. Let's go ahead and take a look at ARK-K. Here we go. This is the ARK Innovation ETF. I know I've looked at this one before. Not sure if it was for you or for somebody else. It was incepted back in 2014, pulled back. Since then has been in a massive up move. It gave us a nice 5-wave advance into the 2018 high, a very large ABC pullback into the 2020 low, and since then has gone from about, 32, 33 all the way up to 150. It's been a very strong move to the upside. So let's go ahead and zoom in on that 2020 advance and see how we want to label that. Here we go. There's really been only one notable pullback, and that happened between September and November. It's a running correction in that B happened above wave A's high, and C is happening above wave A's low. So it's kind of a running move. Still, it's the largest pullback we've seen since March. It's been such a direct move across the market, including on this guy, on this absolute stud of an ETF. But this is where we place it here. Again, we got a 5-wave advance up into that running correction, an ABC pullback, and this correction fits as a big wave too. And then we've been in a clear 5-wave advance. Looks like it could be getting close to a high here. So that's something we need to be careful of. This advance off of October's low looks like it's a near completion 5-wave move. Let's zoom in and look at this action here. Here we go. This takes a closer look at it, and I just wanted to show you why it does look like it could be completing. It looks like a 5-wave move, and then if you look at wave 5 itself, it looks like it could be a 5-wave move. So there's concerns there that we could be getting closer to a high. A move below 130 at any point indicates that this up leg did complete and is getting corrected to the downside. So if we take a step back, that would be basically wave 3 ended, and we're in a 4th wave correction there. Overall, it's bullish, but again, it's a deal where you got to think we might be in a place where we might get a larger counter trend pullback. Depending on how you're trading this thing, You can sit through that larger pullback, or you might want to exit when it moves below 130. If it's able to stay above 130 from here and turn higher, then we'll know it's just an extended move to the upside, that this fifth wave advance that began in late December is not yet over, and then the potential will continue to exist for higher prices right away. Generally, we don't have to entertain extension this and extension that, but in this market, everything is extending to the upside every opportunity it gets, so we're not going to rule it out, that possibility. But in normal times, this looks like it could be near a high, and a larger pullback could be forming. So hope that's helpful, Arch. Have a wonderful day. I almost called you ARK like the ETF, but Arch, I hope you're having a wonderful weekend. Again, this is Ryan from TrendLizard.com, and we'll take another look for you next month as you provide me with more tickers. Thanks for being a member of TrendLizard, and have a wonderful weekend. We'll talk to you soon. Take care.